What's going on, guys? Welcome back to another video. So in this one, I have a lot of very interesting information to bring all of you guys here. We're going to be going over this $1.5 trillion worth of margin calls that is going out. Now, these margin calls are right in line with everything that we've been talking about over the last week with some very, very significant players in the energy markets over in the UK. Now, this is going to have a pretty significant effect on our US markets as well. And at the end of the day, what we really need to understand is what the effects of this could be. And at the end of the day, that's going to be more fears of a deeper recession going into these colder months. Now, we need to break down all this information, the key levels on the market, and kind of where we need to look for this information going forward to see how it is going to develop. So again, guys, before we get into all of that information here, make sure you guys go hit that like button down below if you guys have not already. It helps out a whole lot with getting this information out to as many people who do want to learn. Drop a comment down below and subscribe if you guys do want to see more videos like this. But let's get right into the charts here, as we always do, and take a look at how the overall market is doing on a longer time frame, the daily time frame. So as you guys all know, we did get this 1348 cross down on this daily time frame here, and we have finally slipped down below currently this 393 level. Now again, that 393 was something I was talking about a lot on the live stream with our group this morning, and once it slipped down below there were some very significant gains, but you're really looking at that 390 level here on the SPY. Again, we've been talking about the immense gamma potential for this thing to keep snowballing down. And what I also want you guys to really keep in mind going into these next couple of weeks is what is the exact reason for a lot of these price movements, and where is sentiment getting drawn from? Well, you know that later this week, specifically tomorrow, we're going to be getting Bank of Canada's rate decision. On Thursday, we're going to be getting the European Central Bank's rate decision. And Jerome Powell is also going to be speaking as well. After the jobs data last week, Powell's hawkish remarks at the Jackson Hole Symposium, again, there really isn't all that much bullish sentiment in the market here, so we could easily continue to see these sell-offs still occur and persist. Is it possible to have some moves back to the upside? Yeah, absolutely. But overall, for the economy, the market, earnings, all of these different catalysts are kind of pointing to the downside here too. So again, we are really looking to take advantage of all of these moves in the market here. Specifically, our proprietary trading algorithm, Trader Joe, just cracked 30% total, which is absolutely unbelievable. You guys aren't going to find tools like that anywhere else. We have Pythagoras, the predictive algorithm that trades on the daily. Same thing with Trader Joe. Invictus, again, the predictive algorithm on the 5-minute time frame. If you guys do want to kind of come and check these out, make sure you guys check out that link down below. It's the best place to come and learn how to trade. We have an awesome community and team helping you guys through the markets every single day. But let's get into exactly what we need to basically talk about with what's going on with this energy crisis that we've been talking a lot about. Europe power firms need 1.5 trillion euros in margin calls, Equinor says. Coming down a little bit further, European energy companies need at least 1.5 trillion in euros to cover the cost of their exposure to soaring gas prices, Norwegian energy group Equinor has estimated, and that does not include firms in Britain. Now, some of you guys might be thinking here, well, oil prices over the last year or so have been increasing significantly, and these are energy companies. How are they getting margin called on bets against a lot of these oil companies? Well, for those of you guys that don't know, since oil and energy, natural gas, a lot of these different commodities are extremely volatile, what these big oil and gas companies will do is they'll hedge themselves in the futures market. Now, if they have these long-term bets out there to kind of hedge their exposure to the wild fluctuations in oil prices, well, it's very possible that they get themselves in a very sticky situation, just like we're seeing here, when the long term of oil prices has very, very significantly increased. Now, the other things that I really want to go over here is utilities often sell power in advance to secure a certain price, but must maintain a minimum margin deposit in case of default. That's exactly what we were talking about there. Now, this energy crisis is so significant right now with this whole situation between the EU, Russia, Ukraine, and the United States that we are seeing some very, very drastic measures taken by some of these different governments. And that's where we get into Italy right here. Italy is going to turn down winter heating to help cut gas consumption. Remember, in the video we talked about yesterday, we were going over how France was looking to basically decrease train travel to save on electricity, not only the power, but also the cost to their consumers. So what they're essentially going to do here, Italy plans to turn down the heating in homes and businesses businesses over the winter to help cut the amount of gas it uses and reduce the risk linked to the total halt of Russian gas flows. Italy imported around 40% of its gas from Russia before the conflict in Ukraine began in February and has moved rapidly to seek alternative supplies and reduce its reliance on Moscow. Under a government plan announced on Tuesday, the temperature in apartment blocks and other public buildings will be regulated at 16 degrees Celsius and 1 degree Celsius lower than previously. The figure will be set at 17 degrees Celsius for industrial premises. The heating will be on for an hour less each day as well. So when you are looking at these different types of move, France is preparing for this. Italy is starting to prepare for this. You are seeing not only discretionary income go down, but also people are already starting to see the effects of these energy costs in their bills every single month. The problem that we have here is that these large, either the gas companies, Russia, the different kind of regulatory bodies in the UK, and this is going to affect the US and our markets as well. It's like what that one line was in The Wolf of Wall Street. When you read about it in the Wall Street Journal, it's already too late. If they are not ahead of this issue going into these colder months, it's going to be very, very hard to slow these situations down. And remember, what we've been kind of talking about with the Fed and the interest rate increases, it's not really going to affect oil prices all that much. If you're going to see a high demand for oil and less supply, oil prices are still going to maintain their high levels. Now, if you combine that with, well, the dollar is at 20-year highs, and you're also seeing people losing their jobs, inflation still persists, well, that creates a very significant problem in our overall market. Now, going back to, again, the situation with oil and this Russian price cap, the chances of a G7 price cap on Russian oil being remotely effective are perhaps best summed up by a recent tweet from a Bloomberg energy and commodities columnist. My friends and I have agreed to impose a price cap on our local pub's beer. Mind, we actually do not plan to drink any beer there. The pub's owner says he won't sell beer to anyone observing the cap, so other patrons who drink a lot there say they aren't joining the cap. Success. So it's really pretty useless, just like what we were saying previously. And then we move into what happened today. Russia has cut off gas supplies to Europe indefinitely. Here's what you need to know. Russia claims punitive economic sanctions imposed by the West are responsible for the indefinite halt to gas supplies via Europe's main pipeline. It represents the clearest indication yet that the Kremlin is seeking to force Europe to lift the economic measures in order for Moscow to turn the taps back on ahead of winter. So what it really all comes down to at the end of the day right now is a lot of people have been kind of floating around these statements that inflation is Russia's fault right now. Now, again, it's not Russia's fault at all. It's all the money printing that was gone on over the last 2 years. But the situation that is going on with oil in relation to this Russia and Ukraine situation is not neutral. It's not helping these inflationary pressures on the overall market because of the things that we've talked about before. Oil is a very, very key component of a lot of different parts of the economy. And since it's so volatile and affects a lot of other things in CPI, well, that is going to be a consistent measure of driving inflation. So these are things that we need to look at, because if we start to see CPI not even coming down even anywhere near close to what the Fed needs in order to back off some of these interest rate hikes, well, they're going to continue to raise interest rates. We're going to see unemployment start to go back up. The purchasing power or the amount of disposable income that people are going to be able to spend in the economy is going to decrease. You're still going to have high oil prices, and you create this cycle of the Fed not really being able to do anything to help out a lot of what's going on in the economy right now. So guys, that is going to wrap up this video here on this $1.5 trillion margin call. If you guys did enjoy the information and analysis that I provided for you guys in this video, make sure you go down and hit that like button. It costs you nothing to do it, but it really helps us out a whole lot in getting this information out to as many people who want to learn. And if you guys do want to see more videos like this, make sure you hit that subscribe button and turn on that notification bell so you're notified every time I post a new video. So that's going to wrap it up for right now, guys. I'll see you guys in the next one. Peace.